it's a moving target, but you could just say, this is what I want to make this year. You don't want to be wasting anybody's time, clients, realtors, anybody, so the most important thing is conversations, because that leads to everything.
Welcome to the Home Show, where we sit down with builders, designers, and real estate professionals shaping the spaces we call home. I'm your host, Oscar Michaels, founder of hOMe Media. And in each episode, we dive into the stories behind the brands, the strategies behind the success, and the marketing moves that help these local leaders stand out. From concept to completion, from startup to legacy, this is where real conversations happen. Let's get into it. All right, good morning, everyone. This is Derek Romanowski. He is with Integrity Home Lending. He is a mortgage lender, broker. Fantastic. He is local right here in Doylestown Borough. For all your mortgage needs, he is someone that can help you out. Derek, welcome to the show. I'm excited to have you. Excited to share some insight in current market events, potential future market events. What do you think is going to happen and kind of going on? But why don't you introduce yourself and kind of tell us, how you got started in mortgages, where you grew up, stuff like that.
Yeah. Well, thank you for having me, and been following the episodes, and they've been, you guys are doing a great job.
Thanks, man.
A lot of great insight.
Appreciate it.
Yeah, a little bit about myself. Grew up in Bucks County my whole life. As you said, live in Doylestown now with my two sons and my wife, and so we were just talking, age-wise, and we're really in the thick of it here. But
3 and
11 months.
So yeah, Derek's a busy dude outside of work.
Yeah, but it's great. It's just finding the work-life balance here. But how I got started, didn't really set out to become a loan officer, broker, mortgage industry. Knew I always wanted to do finance. That can be a lot of different avenues.
Sure.
A job came up out of college that a family friend had referred me to over New Jersey, and just went with it, and it kind of branched off from there.
Okay. Where'd you go to school?
Westchester University.
Nice, man.
Yeah.
Great school. Great sports program. Did you play any sports?
Didn't in college, no.
Okay.
No. Sports-wise, big golfer. I know we were just talking. Loved to play golf. And, but yeah, Westchester's a great school. I had a lot of people there, and for me, it was like a happy medium of being far enough and being closed.
Sure.
So it fit. So yeah, started out of college at this job. The journey was kind of interesting. Started really in ops, did secondary marketing, and so I learned a lot of the groundwork in ops. Nothing customer facing.
Okay.
So it gave me a good perspective of the internal workings of loan programs, reading guidelines.
Now, was this strictly for residential loans? What do you mean by ops?
Yeah, so operations.
Okay.
Operations. So, typically there's the customer facing, sales, and then you have the ops. So that can be from processing, underwriters, closers, the people that wants the loans in process kind of take it over.
Got it. So it's like back end analytical.
Yeah.
stuff.
Specifically, I was in secondary marketing. So what that is, we ran a lock desk. So for the company that I had started with, we were like a direct lender. So we would lock all the loans. So a loan officer would, price everything out with the client, take the application, but the loan had to be locked with a lender. We did all the locking of the loans, set the margins, any program guidelines or questions, like, you may get somebody come in and say, hey, am I able to do, we have a jumbo loan. Am I able to do 10%? Do we have an outlet for 10% down, or do they have to put 20% down?
Okay.
Because each lender has different, there's the basic guidelines, and then there's lender overlays and
certain benchmark requirements.
So a lot of loan officers just like to, bounce ideas and so we did a lot of that, did a lot of the program, overlays, making sure that, our loan officers knew there was any credit overlays with specific lenders, that kind of.
Sure.
So that was great. That really gave me a good kind of groundwork of how,
absolutely.
And knowledge is huge. It really, as opposed to the flip side, where if I started in a sales position, it's more like, get out there and hit the ground running and
figure it out.
Yeah. So started from there and then got into banking. And that was like my first kind of experience with more customer facing. I really, as the years went on, I kind of knew that was where I wanted to end up. It was, the ops was great. You met a lot of great people, but I felt like it only kind of panned out so far to where
You end up being like a paper pusher at that point instead of, being yourself.
yeah. So the customer facing, it's sky was the limit. You could make it how you want. If you wanted to close 2 loans a month, if you wanted to close 50 loans a month, there was, and that was pretty attractable. And, just being out there talking to people.
Sure.
It's every day is a little different and it really, was more appealing there. So from the banking, that was my first role. We did lending, all residential, but portfolio lending. So, banking, there was a little different approach where, sometimes they would portfolio loans, which basically means they held loans. So you had a little more leeway on what you could do, a little out of the box stuff. And then, people that I followed and really kind of looked up to in the industry went to the broker side.
Okay.
And that's kind of how I got to the broker side. They were bouncing ideas off and talking with them. And, because back in the day, I don't want to say back in the day, but there was a time where brokers kind of got a bad rap.
Okay.
For guidelines and, before there was like a lot of oversight on, what you could charge.
Sure.
So there was a crazy period where brokers could just charge whatever.
Hey, what's that movie with Steve Carell that I'm thinking of? I don't know off the top of my head, but I just saw on Instagram reel about it. Like the brokers in the scene were just like making money hand over fist.
It took a while for them to kind of get back in the good graces of people and saying, hey, like they got a bad rap. And not everybody, there's always bad apples.
Yeah.
Certainly people that were taking advantage of.
Oh, for sure. When money's involved.
Yeah.
People take advantage.
Charging consumers just, and people that didn't know. And, but the broker world, a lot of the people, like I said, that I looked up to kind of landed there.
Sure.
And it's been game changer as far as, what we can offer there.
Sure.
That's kind of how my career trajectory has landed me.
And how long have you been with Integrity Home Lending?
5 years now.
5 years. Okay.
Yeah.
Awesome. And they're right here in the borough as well.
Yeah. So we're,
remote, right?
We like to focus Bucks County.
Okay.
We're a small team. So myself, another originator and a processor. I live here in the borough. I grew up in Bucks County, so we like to focus more on the local feel. Just geographically, Jersey, Philadelphia area is what we do as well.
Sure.
We really like to focus because we've lived here, know the area. I think that goes a long way with, when people are looking at who they're going to work with. Realtor, mortgage, sure, anything. I think the local feel and
yeah, well, you get to build those relationships and you get to know the people. And this is one of the biggest financial decisions of most people's lives. So like trusting the person you're, hoping to get a great opportunity with is huge.
Yeah. And in lending, nowadays with the internet and there's so many, even if you Google mortgage, all of a sudden every page at the bottom, there's, internet lenders.
Oh my gosh, I know.
Putting out these flashy rates. And
it's so convoluted too, like how their marketing schemes they seem so real. And then you call one mortgage lender and give them some information. Next thing you know, you have 75 mortgage lenders calling you and you're like, how did you get my number?
And most of them, if you're buying a property in Doylestown, you might be talking to somebody in California.
100%.
And you got to just be careful. How they catch you is the flashy rates, but the fine print is, well, that's going to cost you 2 points for that rate.
Yeah.
But they drag you along far enough to where
there's no return.
That's kind of like, their thing where, you feel kind of stuck.
So tell me a little bit about like your influencers and your mentors. Like you don't have to name names unless you want to, but like, how did they get you interested in doing like what you're doing today? Was it, their knowledge and experience? Was it, how their growth and how their trajectory in their career, like what got you to where you're at?
I feel like I took a little bit from every person. what really drew me and the people that were really successful and have been successful and have, weathered the storm and market changes. One of the big things that I learned that was, when I first was like their daily productivity plans. They're not waiting for business to come to them. They have every day, they have, their day laid out, whether it's in the morning, it's prospecting, whether it's afternoon, working on their pipeline,
Sure.
in there,
going to networking events,
following up with outstanding leads, so really laying out, that was a huge like eye opener as far as the mindset of somebody that was successful. They don't just sit and wait, and even if they have a huge pipeline, they're constantly looking and so that was a big thing that I saw, the people that were successful that were doing.
I was going to say one of my first bosses, I'll name his name because he's a great guy. I just did his headshot, Boyd Kelly. He's the owner of Liberty Personnel. He's a recruiting office in like the KOP Conshohocken area. And his biggest, like when I first started working there, his like number one thing he would say to me all the time is fill your pipeline.
Yeah.
No matter how busy you are, fill your pipeline because those leads could die so quickly and then you're stuck with nothing. Oh, yeah. And it's scary, especially when you're working a commission job like yourself and, or owning your own business just in general, like fill your pipeline constantly. Like
absolutely.
People sometimes will wait for you to, but if you don't have those leads that are there waiting, you're dry. The well's dry.
I know. And the other big thing was, the people that really were like the subject matter experts. There's plenty of good people that are good sales and they just kind of rely on other people to do the nitty gritty, but the people that really roll their sleeves up and dig through guidelines, because our industry, it's ever changing and there's just so much guidelines. The people that really know it, take the time to.
Yeah, it's like every month there's something new that you have to be worried about or thinking about.
It's a lot. And every program has different guidelines. Every lender has different guidelines. So if you're not, staying up to date and really doing your homework, and that showed as well. I could definitely tell the people that were just the salesy. Like,
sure. I'm here to make a deal.
Just to the people that really cared and, knew their information and that projects. That is, people can tell when you know what you're talking about, and that
can't count a con man. And there's a lot of them out there.
Yeah. So I think those were like the big things that were like eye opening and that I kind of noticed with people and was like, okay, that's how I kind of want to, move forward.
Yeah. When I met you at our networking group, the Bucks Business Group, I'll give another shout out.
Awesome group.
Yeah. We meet first and third Tuesday of every month downstairs in the Hattery, 7:15. That's where I met Derek. And when I met you, like, I just knew you had a good head on your shoulders. And I could tell, like, you really, were passionate about what you were doing and growing it. And it was exciting to see. Mortgages for everyone's not exciting unless you're in the industry or, in the finance world or looking to buy a home or sell a home. But that kind of leads me to my next question. What are you seeing today? Like, what's, rates are around 6.1, I think, 6.2?
Yeah, I think
give or take.
We're in a range, for like a conventional, pretty vanilla, we're probably in the 6%, 6 and an 8.
And this is 30-year, right? Like your basic 30?
Yeah, that's what most people go for. As you drop the term 20-year, 15-year, the rates do come drop. Government loans are in the 5s, lower. But, I looked coming in here today, everybody at the beginning of the year, every year kind of puts, the big hitters, the Redfins, the MBS highways, they kind of put out their projections for the year.
Sure.
So I looked at some of those and it seems everybody's in a range of, for 2026, maybe mid 5s, but probably 5.5 to 6% is kind of going to be
the new standard
where we are, for this year.
And what drives those numbers? Like pretend you're talking to someone. I mean, you don't even have to pretend you're talking to someone that doesn't really know mortgages that well. But like, what drives those numbers and like what keeps it there? Obviously,
Well, right now the biggest thing is inflation.
Sure.
They're looking at the jobs reports, and it's kind of skating that fine line of like not dropping rates too much and. But it seems like the biggest thing right now is inflation driven. So keeping that under control, and that in turn affects, rates and Fed funds rates, which is
Sure.
not directly tied to mortgage rates.
And the inflation rate's right around 2.5%. Does that sound accurate? I'm just looking that up now. I'm just curious.
So the
What?
big thing, they're the first rate decision of the year from the Fed. They didn't cut rates. So-
True. I remember.
But it's weird times. I've never seen, there's people that are much smarter than me that track the charts and can really have good projections. And it doesn't even seem like nowadays there's just so much going on politically and inflation, and almost like it doesn't follow traditional, charting. So it's really tough to navigate where rates are going, what's going into everything. And then the biggest question, we get is everybody wants to know that's, maybe a prospective buyer is, where do you see rates this year,
Sure.
6 months, a year? And we can certainly do our best to project that, but it's very interesting times.
You only have so many tools that, can only go off the numbers given, not, the possibilities of things happening or World War III or, whatever.
Yeah, it's just outside of, the financial world, the real world, there's just so much going on and unanticipated, events that do move markets.
Yeah, absolutely.
It's definitely, very hard to kind of predict and where it's going to go.
I was just going to say, I feel like the market is like in a place where it's never been before. Like people were saying, oh, it's like, this year or that year. And it's like, as it keeps going and progressing, it's like, oh, wait a minute. No, it's not. Or, I think a big thing with the tariffs was huge in terms of like market rates, imports and exports. I just think, for example, like our drones, they're made in China by a company named DJI. And there's like a huge scare right now that we're not going to be able to get these drones to purchase here in the US. So I went ahead and bought, 4 or 5 over the past year and a half or 2 years. The scary part is the technology grows so rapidly, they go out of, relativity very quickly.
Yeah.
With the sensors in there, the camera, the technology that's built into it. Now AI is like a huge player in the game, like eye tracking and stuff from the air, like to tell that it's a human on the ground, not an animal or a car. So there's just all these things and uncertainties in every market, not just housing, but daily items that everyone uses. So I think it all just kind of makes a compilation of like where, money markets land.
Yeah, no, it's funny. I was talking to actually an accountant last night, and he was, we were talking, and he was like, we were talking about home prices and people that are like, think home prices are too high. And it was he was like, relative to what? The past, the future,
That's a great point.
It was like, wow, that really, because it makes perfect sense, because the people that were saying that prices were too high 3 years ago, the prices have just gone up. Yeah. So what's to say that now isn't the cheapest time to buy or home values, from a year or two now?
And no one knows. That's the scary part. It could drop 2%,
but he's like, well, what is it relative to? Past or, the future?
I feel like a lot of people are stuck on the COVID, like that whole thing. And like that was a world scare, like that likely not going to happen, but it could.
Yeah.
For example, like I know, including me and my girlfriend, like our rate, like somewhere around like lower than 3%.
Yeah.
Which is just right now unheard of. It's not 11% like where it used to be, right? Back in the day. Also, home prices were a lot cheaper. You could spend a year's salary and buy a house. Yeah. Well, that's not really the case now.
Yeah. It's been a long time to get people out of that mentality that, that was a very unique situation and almost unheard of. And, to think that you're going to get back in that environment is probably not realistic.
Yeah.
So it's been people are just like kind of getting the grasp of this is kind of the reality.
Yeah. What's reality?
Of the housing market. And
so what are you seeing now? Is it a lot of first-time home buyers? Are you seeing, what's out there right now? Like, are people looking for second houses or?
Yeah. The other interesting thing, in a normal market, I would say, for buyers, you always had a good mix of the needs and want buyers, so the needs are, my lease is ending, I don't want to renew it, I need to buy, or I'm relocating, so I need to buy a home for work or
sure.
And then there was the wants where, hey, your family's growing. I would love I can live in this house, but I would love, an acre of land and a yard, or I'd love a fourth bedroom, so there was always a balance of needs and wants. But now the wants, because if you were locked in lower rates or you bought your house, at a pre-COVID price and you're looking at what you can buy now, they're like, well, I'm kind of stuck. My rate may double. My payment's going to, go significantly higher. I'm going to have to, even though I have equity, I'm going to be just paying higher for a house. So those people have kind of went to the sidelines now. So, the sliver of the pie is just, most buyers are out there are need buyers. There's certainly people out there that,
people are always
money,
looking.
Yeah, great jobs. They don't.
Money's not an issue.
Money. I don't want to say money's not an issue, but like they're like, okay, I'm okay with, I can still save, I can still buy groceries. Still, they're comfortable.
Especially in this area, like, shooting real estate every single day. Our team, like, we see listings sometimes 3 weeks before they hit the market, and it's like, hey, don't share this yet, and we're not ready or whatever. But we see a lot of New York money or North Jersey money, people that work in the cities, and, $3 million to them is, $400,000, $500,000 to us. Yeah. It's more, achievable for them, or, they have family generational wealth, or they got lucky, or they were just really smart with their money and they're able to make financial decisions that a lot of people in the area can't. And they get the first pick at a lot of the stuff that hits the market.
Yeah.
Do you see a lot of cash buyers that, don't need a mortgage, but I think we were just talking about this, like maybe they use the mortgage debt as a tool?
Yeah. There's plenty of people, you see I wouldn't want to say it's fairly common, but you see situations where, they may go, because of how tight inventory is and knowing the competition, they may go in as a cash offer and not have a mortgage contingency, but from that time to closing, maybe they come in and get a mortgage. So they're not, I think the biggest thing is staying liquid, so maybe they don't want to put out 800,000, but they have it, they can prove it if they have to. So we do see that as like a tool where they're going to use it to be the most attractable upfront as an offer.
So they don't have to follow through with that necessarily. So they can say like, hey, we'll be a cash buyer.
Yeah, you can always come in, after the offer and if the timing
works out. Sure.
If they're looking for, a 20-day close, or, you probably not. But we see that plenty of times where, it's strategy as far as being the most attractable offer up front.
Sure.
Everybody loves cash sellers.
And I guess if someone can prove like, hey, we have $6 million in the bank and we're buying a $2 million home, we could buy a cash, but we prefer to use a mortgage, and the sellers sometimes it's like, that's fine.
The
worry is that the mortgage would fall through, right? If they didn't have that.
Yeah, it's just one extra layer of things that can get uncertain. And the agreement of sale, that they've kind of changed that a little to where like your elections on how you check it off. But you can do that. And they obviously upfront will vet that you have the cash.
Sure.
If need be. But yeah, like we were talking, I think the biggest thing with, wealthier people and people that are pretty financially savvy is, the key is liquidity, so if they can,
quicker you can move money,
people's money to where they're not putting out that kind of money, that's usually a heavy goal for that.
Yeah, absolutely. I mean, you just get so many benefits down the road. And a lot of, us normal people don't see those benefits all the time because we don't have liquid, millions sitting around to work with. But when you have, a good relationship with your banker or, your wealth advisor, and they can help you move money, it's really when life starts to get fun.
Oh, yeah.
I'd imagine. I'm not there.
Yeah, you will be there.
Hopefully.
But yeah, and then going back to like, first time home buyers, it's, been tougher than normal with, being able to compete with over asking prices, coming up with potentially higher down payments. It's doable, and there's plenty of them out there, but with the right team and building a strategy up front, that's going to be the biggest thing with, first time home buyers or people that don't have, maybe the strongest credentials as far as down payments.
Sure.
And the biggest thing with going back to your point, what we're seeing is there's just not enough homes right now. Inventory has been tight and is a driver of a lot of things that is going on right now. Keeping prices high, multiple offer situations, so you really have to, when you're putting offers together, you want to be mindful that if the house is priced right and you're in an area that's, very popular, you're going to have competition. You're not going to be the only offer. So you want to be mindful of that. That's a lot of the conversations that we're having with, how do we get you to the right position as far as, being the strongest offer.
Sure.
So you want to kind of have that all in your mind when you're coming up with strategy.
When's the right time to start talking to a mortgage person? Like, what's the process behind this? Like, I don't need a long-winded, but just give me a breakdown of how that works.
I feel like most people start with the realtor. I don't know why. I don't know how that ever came about. So if you haven't talked to, a mortgage advisor, that's the first thing the realtor is going to say. And it makes perfect sense. You want to be wasting anybody's time, clients, realtors, anybody, So, the first part is to get a full pre-approval. So reviewing income, assets, credit. The other big thing I see now is just because you can qualify on paper doesn't mean that's where you want to be.
Yeah, necessarily mean you can afford it. Exactly.
The bigger conversations I'm having is comfort level. Again, going back to the point of like how crazy just everything else is. People are spending ton on groceries, car insurance, everything is so much more expensive. So I think people are very mindful that just living costs are up. So, they don't want to certainly don't want to overextend themselves with the house mortgage payment. So comfort level is really key on, identifying that early. So, and that's what we do. We will first see what you can qualify for. Let's get a range. Do you have an area that you're looking for, price points? And once we know that you qualify, via credit, down payment, income, it's really kind of honing in on where you want that monthly payment to be. And do you have leeway one way or another?
Yeah, of course.
If you love a house, but it's going to be maybe $200 more a month.
You have that flexibility.
Is that really, are you willing to go? So those kind of the conversations, but definitely the biggest thing, getting the ball rolling sooner than later is key.
How long does the pre-approval last? Like once you're pre-approved, is that a year? Is it 2 years, 3 years?
It all depends. The biggest thing is like credit. If we run a hard pull on credit, that has, usually lasts 3 months.
Okay.
But what I do is, if the time horizon is not, 3 months, it's 6 months or
you have time.
Just do check-ins, making sure there's been no clearance changes, big purchases. You didn't go buy that $85,000 truck or
a Range Rover.
Yeah. So it's more just checking in. But, if we have the baseline up front and nothing's really changed, it's pretty, we know the numbers are, pretty well there.
Sure.
And then, from there is your realtor, lean on your realtor. Having a good team is crucial, makes the world. So how that all kind of combines, with the realtor, the mortgage advisor, and that's a really good place to start.
Yeah, absolutely. So I don't need to know any like personal details, but like I'm sure there's pretty wild like stories like within people's finances that you see. Like I'm sure people overextend themselves to, fit that image that they want to fit, and like, you see it more often than not.
Yeah, I mean the one of the great things about this is, and I don't want to be in people's businesses, but you see not every situation is different.
Oh my God!
You never find one set of buyers or clients that have a same situation. So yeah, we see a lot. With not me personally, I remember this specifically, but somebody came in that had a client that had a Lamborghini, and he's like, "Hey, check out the payment on this thing." It was literally a mortgage payment. It was like $2,100 a month or something. Just for a car payment. So you see crazy things like that.
I can't imagine having a car like that and having a car payment. Like, there's no way I'm getting a car like that unless I can pay cash. It's just why? Yeah. Why are you doing it to yourself?
So listen, they were,
or maybe
well qualified, and
maybe they're leveraging themselves and they want to be liquid.
Yeah.
I don't know. Maybe I don't know.
But on the flip side, the stuff that really, and it's very gratifying to help people out, but credit card debt and people that kind of lose control and are like, I don't know which way to go.
It's easy to do too. I feel like the education system has really failed in this area. Like not all, but a lot. Like I had a great teacher in high school, and one class I really wanted to take was money management from a young age. Like I just saw how hard my parents worked and I wanted to take care of my money. And her name was Kim Roberts. I'm still friends with her on Facebook. She's a great woman. And she like taught us how to write checks and like just things that kids don't know how to do. Like you could probably ask a high school and I bet maybe 5 or 10%, maybe less, know how to write a check like properly and accurately.
I know.
That's scary. That's really scary because we have to depend on this generation when we're older to really run the world.
Yeah.
And if they're not teaching that stuff, it's just so scary. And I see it today too. Like I just interviewed someone the other day to be a photographer. Their personable skills were terrible. And I'm not going to name names or anything, but like it's just the generation, like 20 to 25 years old. It's just they almost seem hopeless to a point. Yeah. And I hate to see that. I want to teach and I want them to learn and I want them to understand. But it really starts in those foundation points, like where school, your home life, like how all that stuff's discussed. Not to get off topic, but it's
really important. And yeah, it's kind of scary that people can be that far. It's a great position for me to be in because not only are we just, helping you get mortgages in places, we're also advising. There's plenty of situations where I couldn't help a client out, but I was able to
educate them
and set a game plan for them.
Yeah, like a little roadmap.
Usually it comes with, either too much debt or their credit, got messed up somewhere where late payments so that's really a great thing that we're able to do as well, is even if it's not specifically tied to purchasing a home.
Yeah, you have experience in working with that stuff.
Because we work with like credit repair people that, again, are much more involved and know a lot more than I do.
Sure.
And it's getting people on the right path is, it's really,
it's huge.
Yeah, it's huge for people. And then, going back to the, debt, a great way to kind of rework debt, one of the cheaper options is through home equities and, paying off there. So we've helped plenty of people consolidate debt, and it's life-changing to some people.
Sure.
You could for $500 a month, you could change, somebody's life.
Yeah.
So that's really where, the job becomes, fun and fulfilling.
What's a big milestone for you in your career? I know you haven't been in a super long time, under a decade, would you say? And
yeah,
mortgages?
Coming close to a decade. Actually, no, I started in 2012. So yeah.
Wow.
Actually longer than
longer than a decade. Okay. Time flies. Tell me like a milestone that you feel like you've reached where, you're like, this is what I want to do for the rest of my life, or, this is what I'm passionate about. Like what really like clicked in your head and you're like, this is it.
Yeah. I mean, I think kind of being in the ops and banking, the corporate structure, getting away from that and, being more on the customer facing side, and hearing stories and talking to people. And it wasn't one specific thing, but it's just the way that you're able to connect with people, business and personally. It was just something that was like, wow, I can do this every day and not everything's the same. And the people that you meet, whether it's clients and the journey that you take them on, like from first time home buyer, and now I'm talking to them and they have 2 kids and, they're in the same house that you help them buy. And it's really just the journey that, that you can take people through. And, on the flip side, referral partners, realtors, financial advisors, the people that you meet, we're all kind of fighting for the same thing. And it really makes you just want to, get up and seize the day.
That's awesome, man. So it's rewarding to see, like the roadmap you give to people and seeing them hit their benchmarks because their benchmarks are your benchmarks.
It is. There's a lot going on and it can be super stressful, but, at the end of the day, taking people on the journey and helping them, because most of the time it's one of their biggest net wealth builders is owning a home, and certainly most people, their biggest purchase of their life. So it's a very big milestone in people's lives, and to be a part of that is what certainly keeps me going.
Yeah, I bet. That's awesome. Tell me a little bit how Integrity Home Lending takes a stance from a marketing perspective? Like, what do you guys do to get your name out there? How do you meet new people, referrals? How does that work?
Referrals is everything in our business. So whether that's personal referrals, consumer direct, or referral partners, the other customer facing people, realtors, financial advisors, accountants, lawyers. Those are the kind of people that we market to. As you know, way more than me, social media is a huge thing. It's a necessity in our business. But you're not going to, the other thing that I try to do and, is get out there and have conversations. You're not going to survive in any sort of salesy, customer facing if, sitting in an office or being at home. So my biggest thing is, even weekends, going to open houses, our networking group, I've met just phenomenal people in those, and really just every day trying to have conversations with new people, old people, follow-ups, and tie into social media. I need to do better on social media. I feel like
we all do.
Everybody can, but it's such a big thing as well.
You have to be disciplined and you have to have a strategy in place. There's a lot to it.
Yeah.
I think it's funny. Like my girlfriend's, every time we go somewhere, she's like, somewhere, you're talking to someone. It's like, I'll talk to the random guy in Wawa line, while I'm getting coffee in the morning.
But it's back from your bartender days.
I think so. Yeah. Like my parents were always just great at talking to people. And my dad was a great salesman. My mom was a great saleswoman. And you just never know who you're going to meet. Like there could be a guy dressed as a homeless dude and he drives a Rolls Royce. Like you just never know. The conversations I've had working behind the bar were huge and just like helped me get comfortable in uncomfortable situations and, break that silence. And when, someone's down, you can work with their moods. But I've met great people literally standing in line at Wawa and got their phone number. Next thing you know, they're like, hey, you want to photograph our house? I have, my cousin and someone's selling their house too. Next thing you know, I have great relationships with them. They introduce us to a realtor that they're working with. Next thing you know, we have a forever client.
Yeah,
conversations can go a long, long way.
It's huge. And another kind of thing that, I learned and anybody you come in contact with, you don't want to be overly aggressive or pushy, but you try to fit in what you do, any conversation you have, whether you're at the food store, whether you're, waiting in line, pick up takeout food, if you can.
It's my financial risk between Wendy's or McDonald's.
Yeah, but, and that's an art in itself because you don't want to just say, hey, here's my car, if you're ever thinking of, but you want to, if you can let as many people know what you do and kind of ease in there. I mean, it's huge, because it's all about conversations. And part of the, the eye-opening thing with the daily productivity plan that I took a mentorship class. This was a couple of years ago, and it's amazing things that you don't even think about how you can actually quantify and back into. It's a moving target, but, you could just say, this is what I want to make this year. What's my average loan size, commission split there? So how many loans do I have to do per month to get there? And then what's my pull-through rate? So if I need to close 5 loans a month, but that kind of equates to, maybe my pull-through rate is 90%. So I have to do, and then from application, how many conversations, if I have 20 conversations and that leads to, 10 applications, it was crazy how you can just back into all of this. But the bottom line, the most important thing is conversations, because that leads to everything. So that was like a crazy just pyramid of how that all lays out.
Eye-opening.
And I didn't really know that you could quantify it, and people smarter than I am, and mentor, they kind of broke it down, and it was wild, but it all came down to conversations.
Yeah. I mean, I have a whiteboard in every office. I have one here. I have one in my home office, and I write on it every single day. And if you're not planning your goals, it's like driving to California without a GPS. Yeah. I probably could do it, but it's going to take me a lot longer. I might be dead by the time I get there. But being able to put a number on every goal you have is so crucial to growth. Also, you can see where you're bottlenecking, where your challenges are. Man, I didn't hit my conversation goal for this month in your industry or any industry. I mean, I don't really set mine with conversations. I set it with how many touch points I have. If I meet someone new, like I want to, make it a point to talk to them a little bit more, understand what they're doing, how maybe we could help. And if we can't help, who can I direct them to? The conversations are just so important in life. And I feel that a lot of people don't take advantage of social media in that aspect. You might not be, you're having a conversation with yourself, and I do it a lot in my videos. And right now I'm having a conversation with you, but people are going to see it as me having a conversation, with myself through social media, because these will be broken down into clips, but these clips might educate someone that you've never met before. They might say, oh my gosh, Derek was a great dude. He seemed like really knowledgeable in his space. Let me just reach out to him to see if he can help us. Yeah. Next thing you know, you have a lead in your pocket from a simple social media clip that was free to post. Yeah. Harnessing things that are free to use as a tool are a great way to grow, great way to leverage yourself. And I feel a lot of people in the industries that we work in don't understand that, or they're uncomfortable, and you have to put yourself in these uncomfortable spaces to grow.
Oh, that's everything. In our industry, if you're not doing that and you can't take rejection or things, hiccups along the road, you're not going to survive. You have to be out there. You have to listen. I get a lot of no's, people that, I have somebody and
sure,
so
rejection's the best way to grow. Best way. Do you cold call?
I do.
Do you find it challenging?
Not anymore. No.
It's good.
Actually, what I've found more that I like to do is, and I alluded to a little, on weekends, open houses. I felt like the face-to-face way of communicating, kind of, you can put a name to them, you can just have connect on some level. So that's more of my cold calling these days.
I love it. A great way.
Yeah. So what I do is, again, I'm not a very overly salesy type of person. So it's just a matter of stopping in, hey, if it's in Doylestown, or, I try to go the surrounding areas and just stop in, hey, I'm a local mortgage broker, want to come see your house and just introduce myself. And, if you ever need anything, or, would like to, go grab a cup of coffee or lunch or something, and
absolutely
connect there. Because the cold calling it's rough. It's rough.
It can be, for sure.
You can get a lot more done than having to drive to open houses. And so it's definitely a part of it.
That's how I learned. So when I was doing IT recruiting, that's all I did was pick up the phone. I mean, yeah, we'd use LinkedIn and send messages and stuff. And I think that's when social media grabbed my interest of how easy it was to get leads, at least, semi-warm leads. But cold calling it, I was so bad at it. And it'd be people would hang up on me constantly.
Yeah.
And then you just find a groove that fits your personality and your goal of what you're trying to do. Cold calls are so much fun to me today. I was calling on my way to BJ's the other night with Lindsay in the car, my girlfriend, and she was working on email. So I was like, I'm going to call a few realtors we never worked with. So I did. And next thing you know, I connected with them on Instagram, and we have a shoot in a month.
That's awesome.
And it's definitely nerve-wracking. You don't know what to say. You don't know what their mood they're going to be in. They could be in the middle of a meeting and they pick up and wrong time. It's it happens though. You have to go into that cold call hey, if this isn't a great time, let me know a good time to call you back.
Yeah. And the other biggest thing that I've learned, and it kind of goes with, any industry, is providing value. Cold calling and being out there prospecting. If you can't provide value, for our industry specific, no realtor wants to hear, hey, I get the best rates and I can close a loan the quickest, and we can do this, because that's what everybody's saying.
Sure.
So you have to flip the switch and kind of get in their heads and figure out, in past experiences when they worked with somebody, what did they like, what didn't they like, and provide value to them, because just the buzzwords of good rates and that's not going to get you anywhere.
Seriously, you got to set yourself apart.
Yeah, it's big and tougher to do than
easier said than done.
Easier said than done, and but you learn. Each time you do it, each time you get the no or the yes, and you learn from it. You can never stop. Definitely in our as a customer facing and referral based, it's you can never get too complacent.
Fill the pipeline.
Yeah, as you fill the pipeline, and you got to make it going. Keep going.
So what's the best way to get in touch with you? Say someone sees the episode, they're interested in getting in touch with you. Is it easier by phone, by email, stop in the office, or
whatever's easiest for
Sure.
I would say, the other thing is I always answer my phone. That was another big thing. You always answer your phone. So text, email. We actually, ever since COVID, office spaces, in the real estate's been
sure.
It's changed a lot. So, we kind of, at least I float around a lot more, but we have areas that we can, meet. And certainly here in Doylestown, it's nice to connect over, not in an office space.
Sure.
Yeah.
Well, Derek said it here. If you're interested in buying a house, think about your timeline to get the ball rolling. If it's 3 months, 6 months, a year, probably talk to a mortgage broker or lender first. Derek is a great opportunity for any listeners or viewers watching this. He is right here, local, Doylestown, Bucks County area, but he can work in Philadelphia and Jersey and help you with your needs and your goals and set you a roadmap and kind of a plan it out for you on paper so it, makes sense to you and makes sense to your clients. I think going with a mortgage broker is clearly the obvious right choice here before going with a realtor. So that way you're not wasting anyone's time, like you had said. So for all your mortgage and lending needs, Derek is a great option here for you. And we'll drop your info on the end of this episode. Derek, thanks so much for popping in.
Yeah, thank you for the opportunity.
Absolutely, man.
It's been great.
Thanks so much.
Yeah.
Thanks for tuning in to the Home Show. I hope you enjoyed the conversation and found something you can take with you. If you like this episode, be sure to follow us and subscribe on Spotify, Apple Podcasts, and YouTube. And if you're a local leader in the real estate, design, or construction industry and want to share your story, visit om-media.com to apply to be a guest. Until next time, remember, you can't go home without OM.